Okay, good morning everyone. We'll start lesson 3. Today lesson will go through LO3 learning outcome 3, which is about be able to calculate the VAT and complete the VAT return. And that's what we'll go through. Okay, most of you already dealing with the VAT, so hopefully you know already a lot of value-added tax. So we'll start. Few people are joining. Morning, welcome.
Good morning.
Good morning. We'll start. So today we'll go through LO3 learning outcome 3, be able to calculate the VAT and complete the VAT return. So always good to be, when we start any activity, good to be reflect. What do you think 1 to 10? How much we know about VAT?
5, 6.
5, 6.
3 for me.
Okay, thank you. Thanks for reflecting. So indicative content, the scope of VAT, which we'll go through. We'll discuss zero rated and all the reduced rate, understand how the input VAT claims affect type of supply, registration scheme, pre-registration input, and deregistered yourself, output and capital assets, and the VAT accounting, tax point, VAT invoices, valuation of supply, no deductible input, relief, as special, the scheme for SMEs, cash accounting, and various others, and penalties and non-reporting and the late payments. So that's all we'll go through this morning. Okay, so still I kept the slide for all the rates, so we'll carry on the rate slides, and we know the VAT. Okay, so we can do a bit quiz recap. Maybe I'll do the later on. So hopes until that point everyone will join. Okay, then next we go through 3.1 and merit criteria together, because 3.1 is a describe the registration and administration procedures for VAT. So we know the VAT is indirect tax, normally be a final customer, administered by HMRC and custom, and collected by VAT registered trader in the course of their business. So they collect from the customer. Basically, they are the tax collector on the behalf of HMRC. So then the VAT registered trader, they charge the output tax. We claim the input tax. Morning. So they claim input tax deducted from output, and the tax need to pay to HMRC. If we have VAT given on the credit side in the trial balance, then it means the VAT balance. If given on the debit side in trial balance, it means is a refund from HMRC. Okay, then next, any question, please, you can ask. Scope of VAT. VAT applies taxable supplies of goods and services made in the UK by a taxable person in the course of business. So within the scope of VAT, taxable supply can be standard rated, reduced rated, and zero rated. Do we know any examples of these, please? So what are the standard rated? Most of the goods we have standard rated.
Yes.
Any example of reduced rate, please?
For example, some of the gas, like domestic use, I think, or gas, they charge like 5% reduced VAT.
Excellent. So, like, and this can advise to our client. Please, if there's a background noise, you can mute yourself. Huh? So, if is we like the many businesses, especially takeaway restaurant, they have a flat as well,
Yeah.
like upstairs flats and downstairs is takeaway or small, any food business or normally other businesses as well. So then, because if you're using the same meter and you can fill the form, it's called VAT reduction form, and then the VAT can be reduced. You can proportion it, but the VAT can be reduced to 5% on the bills. When VAT will be reduced 5%, then climate levy, which we call CC, the environmental tax, that will be reduced as well. So you don't have to pay. So technically, straight away, by doing this, you're saving 15% on the VAT, plus you're saving on the climate levy, and this, of course, rate can be even domestic rate. So that's, huge for some clients. Okay, what about the zero rated? What sort of the things we have a zero rated, and what is meant by zero rated?
Zero rate is like don't have any VAT on it.
Okay, so why we say rate? If it's a no, we can say exempt.
It is still VATable.
It's still VATable. Yes, good. It's not exempt. Yes, but the overall the turnover will count toward the VAT turnover limit. Like 85,000. So how much is we have if we want? It's a compulsory registration. 85,000 now.
Yeah.
Previously was 83. So 85,000. Zero rated always count toward your turnover of 85,000. Even you're not paying VAT on it, it's a 0% apply, but only the purpose is count towards the. Okay, taxable supply, charge and output tax can be reclaimed, which we earlier. If you want to deregister, if your VAT drop, your turnover drop to 83, then you can deregister yourself if you want to, or you can stay voluntary registered. So registration and deregistration. So compulsory must be registered within 30 days. If your turnover reach next within 30 days, you expect you should register. Must register without delay. Anytime there is a responsibility ground to be believing that the value of the taxable supply will exceed. Voluntary registration, you can register voluntary. Input can be reclaimed. Administration burden can be a problem. Disadvantage voluntary registered. Please, now we have 85 according to
Yeah.
Finance Act 2020. Sorry, my slide may be not reflecting there, but I'm reflecting here. Okay, then registration. Does the business make the taxable supply? Or the taxable supply are expected to be 85 within 30 days? Then must register. Taxable supply date maximum 12 months. Exceed 85 historical turnover. Yes, if is or no. Yes, if not. So no required to register, can be voluntary registered if not. Any question?
No.
Okay. Voluntary registration, even your threshold is less. Threshold exceeded temporarily. Failure to register, then of course penalty, and we have to inform to HM. Then I copied the link. Hope so sometime it's work these links and maybe couple of not work. So you can copy and paste this link and you can look around e-learning in your end if you want to do. Otherwise, I'm going to send you the handouts as well separate, to do practice. Do we know tax point? What is meant by tax point? Each supply is
Invoice.
sorry, yes?
Yeah, it's the invoice date.
invoice date. Yes. So that's really matters in the VAT return. So
Yeah.
basic tax point, the the date on which the goods removed are made available to customer, not the date we receive the money. Yes.
Yeah.
So if you good delivered before and then of course the date of when they delivered that will be count. So which we'll go through in a minute. So the date, the service, but in case of service, when the service is completed, not the service starter. If your service you're providing, that point will be the tax point, and you should include in the particular quarter return. Actual tax point, date of invoice issued, the payment made before the basic tax point. That's the actual tax point. Alternative, if the earlier tax point is not used, the invoice date and the invoice issued within the 14 days after the basic tax point, if the goods, yes, so that will be used as tax point. Okay, the tax point, deposit and the advance payment. There may be two tax points when deposit is paid, one of the deposit and other at the balance. The tax point on the deposit is often the payment date as usually occur before the delivery. Yes. And do we know the pro forma invoice?
Yeah.
No. How much is the limit? Even you don't, give the detailed invoice, yes? And it's a 250 pound. So the way to the real invoice before the determine the tax point. So pro forma invoice we're not using for the tax point purposes. When actual invoice, if the actual invoice come afterwards. Okay, so this is then e-learning again for the text points. Okay, so to understand more about all these, so these are the cards. It's called cap and pocket cards. So we all given here. So we have introduction to VAT registration, documentation, scheme, errors and return. That's the key topics we have in our learning out for our learning outcome 3. So please, like you will see there, what is manufactured is output is a 40 pound. Then they charge the VAT. Yes. So output 50 and the input was 40 and the total paid to HMRC. How and then ultimately it goes to the final individual. So that can be reached to 370 because the margin and part of the key and then VAT input will be there. So that is good, explanation for these. You will see the little mind maps, yes, paid by and types of supply, yes, taxable supply include and standard rate, reduced rate. And you will see they are zero rated. Yes, these are all the zero rated. Exempt supply, yes. Okay. So that give you all what we are discussing here. So it's good to look around back and if you want to do the questions, and this is the book letter, so which we'll go through some we can pick, Okay, so then errors, if we have errors, correction reporting threshold. If the net error is not deliberately, if it's a deliberately, we know PPCIO. Do we know PPCIO? Popular people chat in office, yeah?
Yeah.
So the ethics will apply as well, not just the rules. But more than the greater than 10,000, 1% turnover, maximum 50,000, it will be exceeded the error correction reporting threshold. Then we need to fill the form which is required and we need to declare it. Deliberately error must be discussed separately to HMRC errors correction team. Error exceeding threshold cannot be adjusted. On the next VAT return, error report in writing to HMRC error correction team. Form VAT 652 we need to fill. Error not exceeding the threshold can be corrected in the next VAT return. But here some people maybe do the deliberately, huh? Oh yeah, I'm short about the cash. Why? I'll go in the next VAT return. I'll declare it. Huh? I'm not declaring now. Technically, we're not supposed to do, ethically and morally. So the late return and the payment issued with the surcharge level notice, 12 months, and payment default in the period leads to surcharge assessment. If the VAT return is not submitted, the HMRC raise an assessment and what they believe to be owed. Careless and deliberately, these will be liable penalties. An inaccurate return penalties can be reduced if tell the HMRC, and failure to keep the record kept 6 years, the penalty could be imposed, and failure to register penalty can be imposed. Okay, some people been caught. They have a fake VAT number. Yes. Do we know what we can do?
You
Sometime
can
on the
check.
invoice, you getting the invoice and written the VAT registration number. Yeah, and even few restaurant been caught. They charge from the customer. Actually, they're not registered with the VAT HMRC. So how you can check? Can we check?
Yes, you can check on the website.
Yeah. So you have the invoice is the VAT registration number there. You can check.
Yeah.
Entering the VAT registration number. So fraudulent, of course, avoidance of the VAT. The falsely reclaim input. That's huge. A lot of people being caught, especially sending container to Middle East and getting container back and claiming the VAT. Yes. So that's a lot of things, lot of investigation going on, ongoing as well. So tax avoidance is illegal. Tax avoidance, of course, we know the penalties can be. Okay, the changes in HMRC VAT legislation, notice changes via, of course, due to the COVID-19 and the payment. Yes, HMRC delayed, so that can be, we can look around. Impact on systems and customer, of course, your cash flow can be. So that's all we need to be, and HMRC always reviewing these, arrangements. So contact with HMRC if any problem you have. If the client should always be made polite and professional manners. Control visit can be local HMRC officers carried out the control visit, examine the car to check, the law is being properly applied or not. Any question? Okay, then we need to be ethics we discussed, and then we have a 3.2. We need to compute, we calculate under the VAT tax scheme for the small business organization. We know three types of schemes we have. One is called annual accounting scheme. Each scheme have advantage. If you are annual accounting, this scheme can be used with other scheme. If your return is 1.35 million and into excluding VAT, you can register or you can choose this scheme. But you can only stay on this scheme if your turnover is up to 1.6 million. If it's more than that, you can deregister yourself from this scheme. And this scheme can be used with the cash accounting scheme. So is a good is a only one return each year, which save lot of admin side. Monitor supply to ensure the yes turnover limit not exceed. Some disadvantages can be you have to regular money. Okay, cash accounting again is 1.3. It can goes up to 1.6. Advantage. What are the advantage? Why people choose the cash accounting? Anyone? Anyone? What do you think? Why cash accounting?
Basically, when they receive the payment, they take in the accounts, isn't it?
Yes. So cash accounting mean you only do return and
On the payment.
include if you receive the cash and if you make the payment. So
Yeah.
your input VAT can be claimed only on the purchases when actually you make the payment to your supplier and when you receive the money from your customer. And if you have a bad debts of course can be adjusted straight away. There won't be any bad debts. Do we know the bad debts rule? How old should be, then you can reclaim. Like say in the previous invoice, you pay, yes, you paid the VAT, but the customer not paid you now, and you was an annual accounting for suppose, or you was any other accounting standard schemes. So what do you think? How old your bad debts which you can claim? Anyone? The money we not receiving, the customer not anymore in this world, customer business dissolve, yes, a number of other reasons. So is need to be 6 month old after your date of return, 6 month old your bad debt. If you not receive the cash, it's more than 6 months that you can claim as a bad debts, the VAT element say, and that can be refunded from HMRC. Any question?
How about if you subsequently receive the money after 6 months? You have to repay it back to HMRC straight away,
No. Let's say you are on the standard scheme, yes. You do quarterly return, yes.
Yep.
And you declare output, yes. And you do the credit sales, and you shown as a sales in your VAT return, and you paid to, if you pay to HMRC the money, yes, and you paid, let's say 120 on 20% VAT, 20 pounds, and if the customer not make your payment in the later dates, whatever your agreement was with the customer, with the client, if they don't pay, if the invoice was older than 6 months, after then you can claim this bad debts in the VAT return.
But how about if they then pay after, like, say, 8 months, if the customer pays you, you then have to refund HMRC the same money?
Yes, you can claim back, minimum limit need to be 6 months.
Okay.
So minimum limit need to be, if it's a 8 month, 10 month, your customer not paid you cash, yes. We're not looking cash accounting. Cash accounting is automatically adjusted. I'm just talking about the standard, okay. So that's, if you not received it in the previous return, you display that the VAT, but the customer not paid you, you can claim back because they become a bad debts, if the invoice was more than 6 months, because you have to wait 6 months minimum. It can be 8 months, 12 months you can claim, because that can be your contract 12 months. Okay, then flat rate. Do you know the flat rate? What is the flat rate? Why flat rate? Do we know the rate? And what are the benefit of flat rate? Anyone we all dealing with the flat rate?
Yes.
So what is about flat rate, please?
Flat rate is a accounting scheme, I think, and business can opt in for the flat rate by applying through HMRC, and it is actually as per the flat rate you cannot claim any expenditure other than the capital expense up to 2000 or more than 2000. So business will collect 20%, but they will pay a certain percentage to the HMRC, not 20% back to the HMRC. So it depends on the percentage, depends on the business to business.
Yes, so you have to look around which business profile. what type of introducing zero rated, reduced rated, yes, exempt supply, then you can guide the flat rate is best for, because the flat rate you don't have to keep the record all whatever your output, not input, whatever your output, you have to pay the flat rate on. It can be 12%, huh? Like 8%, 12%, depends upon the nature of the goods. So that's we need to always check. So business can be calculate the VAT due by applying on the flat rate scheme, VAT inclusive taxable turnover. The business, if the no more than 150,000 turnover, then they can choose this scheme. But lot of businesses don't fall in this scheme because their turnover is more, so they can't choose this scheme. When they join this scheme, and they can stay on this scheme up to 230,000 turnover including VAT. The advantage is simple administration and don't need to be deal with the VAT on the purchase invoices. Discount can be 1%. Further discount can be given in the first year and can lead to be less, the VAT payable. Depends. Yes. We need to. Disadvantage cannot be reclaimed the VAT on the purchases and the expenses. Flat rate applied turnover including the zero rate and the exempt supply. They're all included in the turnover as well. So you have to look around how many you're selling the goods. Huh? Then you can choose the scheme. Again, ethics we need to be follow. Reclaim input. Business entertain input on the business entertaining cannot be reclaimed if they entertain overseas customer. Do we know if you travel to US and you bought a laptop, yes, and let's say you paid the VAT, let's say there was £120 VAT, yes, you're an individual, huh, and you bring the laptop from US to UK. So what do you think, you UK resident? So what we can do? Can we claim back this VAT as an individual even? In US it's called GST, General Sale Tax in other part of the world. What do you think? Anyone knows this? Yes, on airport, if you keep the receipt, you show there is a tax counter on every airport. You have to submit that receipt and you can claim this £120 VAT if you paid. Yes? So anyone who are the visitor in the UK and then they buying anything which they're not consuming in the UK, they're taking abroad and they can claim back the VAT. Any of your family friends will come. Huh? So that's apply as well. So input tax on the entertaining stuff can be reclaimed. Cars and the van. Input can't be reclaimed on the purchase of the car. There is any private use. Input can be reclaimed on the purchase of the van. Yes, so we need to look around the purpose of it. Exceptions, exclusive for the business purposes, taxi businesses, driving, yes. So normally the VAT, if we are reclaiming, so we don't include in the value of the non-current assets. We know the non-current asset, which is mean long-term asset. Yes, capital asset, like earlier you said. So that's all. Anybody, any question, please? Okay. Capital items when input recovery on the purchases. Yes, most of the cars. No. Charge output tax on the sales. Yes. Most of the cars. Yes. No is exempt. Okay, the partial exemption can be a business make, some taxable and some exempt. Include between the taxable supply and exempt supply. The VAT attributes to the taxable supply input relating whole the taxable supply is fully recovered, and the VAT attribute to exempt supply input, related to the whole to the exempt supply may be recovered subject to de minimis limit. Do we know de minimis limit? £650. That's which we can go through. Please, this is further you can, if we have anything you want to, if you press should be minimal, we can say limit. So you can find the keywords, the term you will see there being used.
625.
620 is including VAT. Yes. Come on. Yes. D is on page 15. So that's being used, this term. So if you will go, should be here somewhere. It's not coming. Yes, D minimize here. Limits. Yes, you said so already. Yes, so you will see there. Threshold is deliberately deminimize threshold. That's the error deminimize. The limits on errors can be. Okay, that's fine. 6.
Is there
That should be. Sorry, what you said?
in the the net error and the minimal threshold is 625.
Okay, that's the form 652. That's which we can declare. That's the limits of. Okay, yes, you're right. Good. So that's we need to be look around. Okay, import export. Yes, if we do within EU, we call the acquisition and dispatch. But if it's outside, we use the word import and export. Of course, still is a lot of things are changing due to the Brexit. So that's you need to be keep up to date, with the new changes, what is happening and registered. So all these books we need to be look around. We have a standard rate reduce exempt. Yes, EU overseas, and that's the VAT claims as well. There can be technical issues where the head office base, where the goods produce. Yes, that's we need to be look around the overseas trades and the rules for it. So all being discussed here and that's the handouts, please. Which we can look around overseas issues. That's the chapter we have, which is overseas issues, please. Yes, you will see the chapter 8, overseas issues. So if you want to be explore issues, you can. So that can be, we can look around as well. Okay, anybody, any question? Discount trade, discount settlement, discount. Do we know what is the difference? At the time of the trade and the settlement discount, yes. There can also be, that's what the gray area in the past. Settlement discount used to be applied to invoice, every invoice, even the people claim or not claim. And HMRC used to lose lot of money, and the million they lost it, and they changed the rule on it back in 2016-17. So now the rule is every invoice you include the full VAT, and if somebody claim it and pay you early and you provide them discount, then you just minus from it. Yes, that's all. We have a new rules now. So the bad debts relief, like earlier we discussed, is mean VAT accounting provide the link between the business record and the VAT return. Do we know the VAT return form? Of course, you all dealing, so I'm not really keen to go in detail, but we can if anyone need to. So VAT due in the period on the sale, so the box 1. VAT due the period acquisition from other EU states, that's box 2, you need to be filled. The VAT due, the sum of boxes 1. So 1 and 2 box, if you add it, that's equal to box 3. Then we have a box 4, VAT reclaim in the period on the purchase input. So that's the input VAT. But if you have a EU, so you can include on the acquisition figures here as well, because that not make difference, but by law you have to. Okay, you are including their same VAT figure, you including here in the box 4 as well. And then box 5 is the difference between box 3 and box 4. If your box 3 is a higher than the box 4, then you have a VAT liability to pay HMRC. Box 6 shows the value of sale. Box 7 it shows the value of purchases. Box 8 shows the value of goods related to EU member state, and the value 9, box 9 is show the acquisition from EU countries, because you can see it here how much purchase and sales we have within the EU. That's the purpose of HMRC to maintain this way, and some the arrangements can be. Okay, any question? Okay, we can do the online return. Of course, we discussed late penalties and failure if we don't keep the record. Yes, so there are the penalties no more than 10,000, between 10 to 50,000, but no more than 1% of the turnover, and the current return period, not deliberately. And if that's submitted on the form 652, if it exceeded these limits, de minimis limits, yes, then we have to fill the form 652. Okay, then any question, anyone? And please, there are a lot of returns filled if you want to look around. Chapter 7, page 119, so we can go 119, we can look around. So in our assignment pursuit, so you can pick the example from here as well, like you done one of other assignment. Yeah, so this chapter is VAT return. Yeah, and all been, so you will see the sale day book, how much. Okay, so when you prepare the VAT control account, so please, do we know the double entry bookkeeping rule? We discussed about that click. What goes on the debit side? Expense, asset, and drawing. So any VAT on it goes on the same side, debit side. Liabilities, income, and capital goes on the credit side, and VAT on these will goes on the credit side as well. So always keep in mind when you will see there sale day book VAT. Which side of control account will goes? Is it input VAT or output VAT? What do you think? Which box will use the VAT return?
The output box.
And which box of VAT return we should put this figure? Box 1, yes? Box 1 of the VAT return, because that's the liability. And which box this will go? That's the input VAT, yes, which is the refund. Yes? Cash receipt. If you paid, if any payments, yes, petty cash expenses you paid. So that's, you will see there all the working we can do, control, and that's, the VAT working one. Yes, we don't have a EU in this one. So you will see here. So working sale day book, we have a VAT figure there. We have a cash receipt VAT there. And total VAT for the period is this. We have a purchase, cash payment we did, we paid the VAT on it, and petty cash. So cash payment mean, you done the cash purchase,
Yeah.
So then this is make the total input. So you can say output minus input give you total net. The box 6 give you the total value of sales. Box 7 is total value of purchase. So that's the way we can fill the boxes, and will show we have a liability. We'll see here box 5 difference. So we have 184 is a liability to pay to HMRC.
Yeah.
Okay, so we can use this, we can use the snipping tool, and we can add the example and that will the VAT return. Okay, that's and I included the video link there. Okay, if you want to do the quiz, how much you know about VAT, what you can do, please, you can copy this link. I can show you. So you can copy this link. Just one second. It's not working. So it's all about I'm right and wrong. So at the end, it shows you all the answers, and it's good to be test your understanding. Do we know or we don't know? Okay, that's there. You want to play the Kahoot? We'll play the Kahoot as well. Anyone played before? Yes, I think so. A couple of you maybe played. So we can test our understanding, what we learned up to now. Yes? Or what you know already about VAT, the radius. Okay. My Google is, come on. Okay, so please, so this Osborne test you can do in your own time. So by copying the link, please. And we'll see, if I can play, if it's work. Not. Sorry guys, my internet is. Okay, anybody, any question, please? Anyone want me to explain anything related to VAT, you think, or we can discuss collectively? Maybe you know more than me, even because you're dealing regular basis VAT, yes? So that's, the area, but we can explore it, the further. If you have any point we think we need to clarify, we can go HMRC website as well itself, and the booklet, which I am going to send you as well. So that will be available on mobile as well. So please. And the next lesson will be about assignment discussion.
Yeah.
So in which we'll go through how we can address all the learning outcome. So if you already started, it's good, it's fine. You can carry on. Okay, so this is all about VAT. Come on. Okay, you want to play? Let's, we'll spend 5 minutes on this and then we'll finish. Come on, my Kahoot. Sorry, not working properly. Okay, I think so. Maybe we will try to play, next, huh? I think so. Is the issue with website something? It's not giving me the button layer. Okay, so that's please we can maybe go through the next lesson. The Kahoot one slightly struggling to log in, so not really want to keep you. Okay, so this one please you can copy the link and you can you can play your end. I think so will work. Yeah. So this you can. So monetization. All my links not working. Why not? Sorry guys, just I'll give you quickly. We're doing finance act. Okay, so update the link to the chain, the link. Okay, so this is the link there, and you can pick the business register account can a business only supply the VAT exempt services and the purchase standard goods. What do you think? Is need to be registered or not? The business can or can't? Can you see?
Yeah.
What do you think? Which one I'll pick? The can or can't?
Yeah, can.
Sorry, you said can't. Okay, yes. So that's the way you can see at the end. You can see the answer. If you can't find it here, the zero rated a business supplies zero rated goods and purchase standard rated. This business can or can't.
Yeah, can.
Yes. So this way, you can look around all. Yes, the increase VAT or decrease VAT. So these are basically test your understanding how much we know. Different schemes, those we discuss. So you can play. There are the 15 questions, and that will help us to develop further, our understanding, or boost our understanding in those areas. So we'll keep up to here. So today we discuss about VAT return, VAT scheme, threshold, errors, and all about the VAT. So please you will be available these it's called the Kaplan Revision card BPP, this handouts as well if you want to use them, and this booklet, all the questions will be there, so you can look around. In terms of your assignment, you can pick examples, whichever example you like. I'm not really suggesting, and the next lesson will be assignment discussion, in which we can dig out how we can address the learning outcome. Okay, that's all today, and I'll speak to you during our next lesson, and that will be about assignment discussion. Thanks for listening and attending, and I hope so speak to you all during our next lesson. Thank you. Bye bye. Stay safe. Anybody any questions?
Thank you.
If you have a question, you can ask. If no question, goodbye. Thank you.
Bye.